Hi, my name is Trishana Kimble, mortgage broker with Edge Home Finance. I'm here to give you everything that you need to know about down payment assistance. Down payment assistance is one of those things that a lot of people need, but a lot of people are weary of or don't really want to need it or don't want to talk about it. Maybe you are unaware of down payment assistance that is available to you and how it will work for you and your family if you chose to use down payment assistance to purchase a home. We're going to go through all of the ins and outs of down payment assistance today. So sit back, enjoy. I hope that you get something out of this video. If you have any questions, please drop them down below or send me an email and let's talk thoroughly about down payment assistance and how it can help you and your family get into a home. First things first, down payment assistance is not a one size fits all. There are many different types of down payment assistance that can range from nationwide, countywide, statewide, citywide. There are so many different options when it comes to down assistance. So don't think just because there's a down payment assistance in this county that it wouldn't work for you in another county, or in this state it won't work for you in another state. I'm going to talk in general about down payment assistance that is available to everyone. So if you'd like to know more about a specific product, you would have to email me separately. First things first, there are three different types of down payment assistance. First being grants. We all love grants. This is money that you do not have to pay back. It comes from your lender, from your county, from your bank. Whoever the case may be, they are giving this money to you, maybe because you meet the first time home buyer requirement, an area requirement, an income requirement, or a job requirement. Majority of the time with grants, you will be looking to have at least a 620 credit score. I have not seen a grant offered to anyone lower than a 620 credit score. They do want to know that you are financially responsible to have that grant. Also, just like any other down payment assistance program, grants come with a timeline of how long you have to be in that house or how many on-time payments you have to make in order for that grant to be forgiven. You want to make sure that you are checking the guidelines before accepting any type of grant money. The second type of down payment assistance would be forgivable down payment assistance. This to me is more popular than grants only because forgivable down payment assistance is always readily available. Since I have been in the mortgage industry, I have always known some type of forgivable down payment assistance. Again, with forgivable down payment assistance, there will be a requirement of how long you have to live in that home. For instance, the programs that I know of right now, there are 3 to 10 years depending on the program, depending on the program and depending on what fits for you and your family, of how long you would have to live in that home as a primary residence prior to selling or refinancing before that money is forgiven. Now you might say, well, I don't want to have to live somewhere. But if you are hoping to purchase a home, whether it's your first home or second home, the hope would be the lender is giving you this money for you to live in this house for a while. They are not giving it to you for an investment property. They're giving it to you so that you and your family can have a home. So the 3, 5, 10 year requirement may not mean much to you, and it may just be something that you don't even think about because you plan to be in that property for at least that length of time as your family grows, as you become married, or whatever the case may have you. The next type of down payment assistance is repayable down payment assistance. Yes, this is what most people assume down payment assistance is. It's always something that you have to pay back, and that is not true. Down payment assistance may be repayable, but it does not have to be. Repayable programs are often favorable to people who have higher credit scores because they come with lower interest rates. They have 3, 5, 10, 15, sometimes 30-year terms depending on the program. It just depends on what fits into your debt to income and what would make sense for your family. Now you would say, why would someone choose a repayable program over a forgivable program or a grant? Well, when you're choosing a repayable down payment assistance program, that payment is inside of your mortgage payment. So if you're staying in your house for 5 years, it's already paid off and you didn't even notice it. It's not something extra coming out of your pocket every month. It is inside of your mortgage payment. And with repayable down payment assistance, you are getting a lower interest rate. Now that's when we get into one of the cons of forgivable down payment assistance or some other grants. Forgivable down payment assistance more than likely comes at a higher interest rate than a repayable program. Now, you can still opt to choose a forgivable program because, again, it's money that you do not have to give back as long as you're willing and able to stay in that house for the specified amount of time. And it makes sense for you financially. That is something that makes sense. The repayable, it comes with a lower interest rate. The payment that you get from a repayable program can be less than a forgivable program just based on the interest rate. So even though you are paying that down payment assistance back and that extra payment, extra $50, $100, $150 is in your mortgage payment, it could be less because the interest rate on a repayable program could be less than what it would be on a forgivable program. Now, with grants, some grants do come at set interest rates, meaning that lender is giving you that money. They require the interest rate to be set at this. Or it can be a county grant where whatever your lender gives you, that is the interest rate. However, those type of grants normally are held for low or moderate income families, meaning that if you make over 80% of your area median income, and this is easily found by, you can Google what is your county and what's the area median income. If you make over that amount, then you would not qualify for those grants. So looking into a forgivable program or looking into a repayable program may be better for you and your family. If you'd like to know more about programs that we have readily available right now, send me an email or set up some time on my calendar so that we can discuss programs that can fit you and your family.